Hi, it's time for another math easy solution. To discuss a pretty interesting topic, and that's on Steemit again. And my last video on Steemit, I went over an overview of it, so make sure to watch that. I'll put that in the video link below. But now I'm going to go over a tutorial on Steem, Steem Power, and Steem Dollars, a different kind of cryptocurrency tokens of Steem and Steemit. So yeah, it's going to be pretty interesting. So let's just jump right in. So Steemit tutorial, Steem, Steem Power, and Steem Dollars. Just want to make a quick disclaimer. There are very few good resources for understanding exactly how Steemit works. So this video illustrates my understanding of how the Steem, Steemit tokens work. Yeah, just fix that typo, so work. I may provide further updates in later videos as I obtain more knowledge about Steem, so hashtag stay tuned. So with that, let's take a look at the Steem white paper again, and this time focus on Steem, Steem Power, and Steem Dollars. So yeah, their white paper doesn't explain it too properly either. So also keep in mind this is from March 2016, so some of the stuff have changed, I believe. So Steem, an incentivized blockchain-based social media platform, and these are the authors of the Steem white paper. So yeah, if you go to page 8 and it states ways to contribute, this section outlines the ideas behind Steem and its rewards for people who provide meaningful and measurable contributions to the Steem community. So capital contributions, there are two items a community can offer to attract capital: debt and ownership. Those who buy ownership profit when the community grows, but lose if the community shrinks. Those who buy debt are guaranteed a certain amount of interest, but do not get to participate in any profits realized by the growth of the community. Both types of capital contributions are valuable to the growth of the community and value of its currency. Additionally, there are two ways ownership can be held: liquid or vesting. And vesting makes ownership vesting ownership makes a long-term commitment and cannot be sold for a minimum period of time. So that they incorporate both of these types of ownerships. So the Steem network calls these different asset classes Steem, Steem Power, and Steem Dollars. So let's look at Steem right here. So Steem, and capitalized for also it's used as well to reference the Steem currency. So Steem is the fundamental unit of account on the Steem blockchain. All other tokens derive their value from the value of Steem. Generally speaking, Steem should be held for short periods of time when liquidity is needed. Someone looking to enter or exit the Steem platform will have to buy or sell Steem. So once Steem has been purchased, it should be converted into SP, that's Steem Power, or SMD, Steem Dollars, to mitigate the impact of dilution over the long run. So Steem is constantly increasing in supply by 100% per year due to non-SMD or Steem Dollar incentives. And I just want to make a note here, MES note. I believe the inflation rate has dropped significantly and is no longer 100% per year. I'll update this in a later video as I learn more about this, because remember, this is from March 2016, this white paper. So someone who will hold Steem without converting it to SP or Steem Power is diluted by approximately 0.19% per day. While the rate may appear high for transactions that take less than 10 days, it is still cheaper than credit card processing fees. Furthermore, the daily token creation is insignificant next to the daily volatility. And I'll illustrate all this in a bit, just to go over what this all means in detail. So someone who buys Bitcoin or any other cryptocurrency and sells it 10 days later could easily lose 3% or more due to price fluctuations. Someone who buys Bitcoin and then sells it the same day may usually pay more. Will usually pay more than 0.4% in market fees alone. In other words, the inflation rate is effectively insignificant during the period of the time the typical individual will hold Steem. So yeah, 0.119% dilution is not that significant compared to the fees that you would do with Bitcoin and credit card fees, etc. So the majority of inflation is actually an accounting artifact rather than a true reallocation of wealth. 90% of non-SMD inflation is distributed back to existing holders of Steem. Page 9, proportional to the Steem value of their SP or Steem power balance, making inflation more of a split. Only about 10% of non-SMD inflation redistributes ownership in the network or non-Steem dollars. Yeah, so basically my understanding of all this is basically if you have Steem, let's draw this entire Steem ecosystem. If you want to get into the Steem environment, you need to, let's say, create an account here. Let's call this MES. And if you want to buy into Steem, you need to basically purchase Steem. So buy Steem. Yeah, so you buy Steem to get into or out of, into or exit the entire Steem ecosystem. Steem / Steemit, etc. Yeah, so let's say you buy into it and you have, let's say for me, MES, let's say you buy 100 Steem right there, and then you also have Steem power. I'll just write, let's say 15 and 20 here for, this is the Steem dollars right here. Yes, if you buy into it or exit out, you need to deal with the Steem, and I'll talk about these other ones later. So this is what's going in or out, and you're increasing it like that. And then let's say another user buys into it, let's say buy into, and then you have another user, call this user 1, and they also buy, I don't know, 20 Steem. Yeah, so basically if you want to get in or out, you buy Steem, you sell it, etc. And there's the SP and SMD labels as well. This is, let's pick another 2 and 30, etc. And we'll deal with that after. Yeah, so as people buy in, they buy Steem, and then Steem gets diluted as there's more and more Steem being created. And also this entire Steem, let's say this is all Steem, this expands. Yeah, every year the inflation, it's being inflated more and more Steem, but it's more of an accounting artifact as just explained earlier. And also let's say there's another user here, also buys in, user 2, etc. buys in for, I don't know, 30 Steem. Okay, so you could buy in Steem and exit it, etc. So now what does that mean in relation to Steem power? Well, let's look at Steem power from the white paper again, page 9. Startup companies require long-term capital commitment. Those who invest their money in a startup expect to wait 8 years before they can sell their shares and realize their profits. Without long-term commitment, a startup seeking to raise additional capital through the sale of additional shares would be competing with existing shareholders looking to exit. So if you want to buy in, for example, here into Steem, you're also going to be dealing with people that want to leave Steem. So this one is leaving by selling. So basically, the Steem is, just think of that as cryptocurrency. Yeah, which it is. So people would want to leave. If you want to buy in, people are leaving and selling their goods. So the value of it starts to decrease as everybody's selling it off. Yeah, so that is a problem, especially in the cryptocurrency realm. That's why the fluctuations change a lot. But savvy investors want their capital contributions to grow the company, but growth cannot happen if the new capital is given way to those looking to exit. Again, here, you want to grow in, you want to buy in and grow the economy of the Steem, but then people are leaving with that additional money that was just invested because their value went up. So there is significant value to having long-term commitment because it enables communities to make long-term plans. Long-term commitment of stakeholders also causes them to vote for long-term growth rather than short-term pumps. In the cryptocurrency space, speculators jump from cryptocurrency to cryptocurrency based on which one is expected to have short-term growth, and again, that's why a lot of these are volatile. Steem wants to build a community that is mostly owned and entirely controlled by those with a long-term perspective. Because Steem wants to encourage long-term growth, it is hardwired to allocate 9 Steem to Steem power stakeholders for every 1 Steem that is traded through inflation or more people buying in, etc. to fund growth through contribution incentives, like that. And also for commenting and liking and having good posts. So over time, this drives the ratio of total Steem value of Steem power balances to the total Steem balances towards 9 to 1. It seems likely that the ratio will be somewhat greater than 9 to 1 due to continued net powering up of the newly printed Steem. It also means that long-term holders are almost completely protected from the dilution used to fund growth. Yeah, so the value of Steem dilutes because there's more and more being created, but the Steem power is Steem that is locked into a contract, which I'll get to, where that grows faster. So it's so it's protected from dilution because it's increasing the number of it as well, of the Steem in Steem power. So Steem power can only be converted back to Steem over 2 years via 104 equal payments. So as you can see here, Steem power is just Steem but that grows at a faster rate, 9 to 1, so that its value is pretty much protected as Steem gets bigger and bigger. Because as it gets bigger and bigger, you're still growing that Steem power. Your value keeps getting growing and growing. But the only problem is it's locked into a contract that you can't take it all out as Steem, which then you could convert to real money. So 1 SP can be viewed as a share in a pool of Steem. The network automatically adds Steem to the pool every block, and at any time users can convert their Steem into Steem power at the same ratio as Steem in the vesting pool to total Steem power. I believe that's 9 to 1, something like that. So converting Steem to Steem power does not dilute existing holders of Steem. Steem power, doesn't dilute that when you convert Steem to Steem power. Likewise, every time Steem power is converted back to Steem, it is done at the current ratio. Again, I believe that's a 9 to 1 ratio. Individuals are guaranteed to have more Steem in the future than they have when they first convert Steem to Steem power. That's because Steem power increases at a faster rate than Steem. So Steem balances are non-transferable and non-divisible except via the automatically recurring conversion requests. So that's the only time that's pretty much you can convert them, just going back to Steem. This means that Steem power cannot be easily traded on cryptocurrency exchanges because even if you were to trade them, they still need to be going back to Steem before you could deal with them. So Steem power is a requirement for voting for or against content. This means that Steem power is an access token that grants its holders exclusive powers within the Steem platform. Transferring from Steem to Steem power is referred to as powering up, while transferring from Steem power to Steem is referred to as powering down. For example, one can power down their Steem over a period of 2 years, yet one can power up their Steem instantly. So now let's put my understanding on what this white paper means exactly. So again, let's draw this giant circle. I'm going to call this this is the Steem. This is the Steem or Steemit ecosystem. Let's say we have here at MES over there, and I'll just draw it like this. Actually, I'll make it a bit bigger. So let's say we have right now we have 10 Steem. So let's say I have 10 Steem, but I also have 20 SP for Steem power. From here, Steem to Steem power, I can go from here instantly. I can go and upgrade it to get 30 Steem power. But then if I want to get this back to Steem, this takes 2 years plus and equal payments across 2 years like that. So to get to Steem, I power down, and this one is power up right here, power up, and this one is power down like that. So the reason you want to get Steem power is because it locks your Steem into a long-term contract, which is that 2 years, so you can't just take it out. So as Steem increases, let's say there's more Steem being created like this. For example, someone buys in, buy in, and we have a person who buys in or just creates an account. User 1. Yeah, so user 1, he buys in, he has 15 Steem, like that. Actually, instead of 15, let's write 1 Steem. He buys 1 Steem in, and then, so when that happens right here, and let's say he has, I don't know, 0 SP, just 0 Steem power, and there's another user right here, user 2, and this person has 10 Steem, like that. Yeah, just fix that up and make this capitalized. And then he has, let's say, 100 Steem power. So what ends up happening is, yeah, so for this person to buy in for 1 Steem, or capitalize Steem, just for easier to deal with. So if we have that, so then what happens here, this increases, and this one right here, I'll put this around like that. This also increases, so for the total, all the people in Steem, I'll write, I'll just write this for summation right here of Steem power increases by 1. Or in other words, put it in a bubble, you'll have MES plus user 1 plus user 2 increase. Actually, whoops, not increase by 1, increase by 9, so that 9-to-1 ratio. New Steem is created, 9 of that gets, yeah, this it's increased, yeah, increases right here by 9 SP, so Steem power, like that. Put a bubble. Yeah, so not only does basically you could view it as long-term investment where your value increases faster than just leaving it as Steem. Also, Steem gives a voting power. So voting power as you publish and comment, etc. So let's say there's a trending list on Steem. You see what's trending here. And let's say we have, initially we have the top trend as content 1. So it has content 1 there, and then there's content 2 that's like number 2 in the trending, and let's say they're currently at the same level, or just like this one slightly below. But let's say we have here MES for me. Let's say I have 100 Steem power, so my account, and I value this content high, so I upvote it. So I go upvote here, and I'll write upvote. Yeah, so I upvote that, and because, let's say someone else has upvoted, I'll write this as user 1, and let's say they upvote, they have 20 Steem power, and they upvote this content right here. So they upvote that. But what happens is, because my Steem power is higher, this ends up moving up. So I'll circle this, moves up in the trending. Moves up like that. And even if you don't curate the content, if you don't want to like or comment on other people's content, you can also upvote your own. Yeah, so right up, can upvote your very own, yeah, your own blog post or comment. Yeah, so even if you aren't curating a lot, you can make sure that yours trends higher. Trends higher. So you can, so more Steem power you have, the higher your chances are of getting trending higher on the trending pages, which is pretty cool. So combined with that, it's pretty much long-term contract where you can increase in Steem faster, and also gives you exclusive power on the blog post to get your content seen more. Yeah, so now let's look at the Steem dollars. It's pretty interesting stuff. So stability is, as page 10, stability is an important feature of successful global economies. Without stability, individuals across the world could not have low cognitive costs while engaging in commerce and savings. Because stability is an important feature of successful economies, Steem dollars were designed as an attempt to bring stability to the world of cryptocurrencies and to the individuals who use the Steem network. Steem dollars are created by a mechanism similar to convertible notes, which are often used to fund startups. In the startup world, convertible notes are short-term debt instruments that can be converted to ownership at a rate determined in the future, typically during a future funding round. So basically you could buy, let's say I paid $20 to this company, and in the future I will get a certain percentage of their company. Yeah, so you pay them now, and then in the future hopefully the company gets bigger and you can own some part of it. So a blockchain based token can be viewed as ownership in the community, whereas a convertible note can be viewed as a debt denominated in any other commodity or currency. So the terms of the convertible note allow the holder to convert to the backing token with a minimum notice at the fair market price of the token. Creating token convertible notes dollars enables blockchains to grow their network effect while maximizing the return for token holders. Steem dollars are referred to with the symbol SMD, an acronym for Steem dollars. So it is my understanding that the Steem dollars is just a contract that gives the owner of any amount of Steem dollars equivalent US amount of Steem at the time of conversion, much like an IOU. So yeah, that's my understanding of what the Steem dollars are. For example, let's say you have right here, so let's say you have 10 Steem dollars in your Steemit account. This, to my understanding, is just equal to 10 US dollars of Steem. So remember, Steem is pretty much the fundamental token. Everything else derives its value from this Steem right there. Yeah, so let's say we have, so we have 10 Steem dollars. 10 Steem dollars. That is equivalent to 10 US dollars of Steem, but let's say in year one, the trading price of Steem, $1 US equals to, let's say, 1 Steem. So this was, let's say, trading price in year one. Right there. So that's the trading price. In year two, let's say this value increases. So we have now in year two, the value of Steem increases. Now you have 1,000 US dollars per Steem. All right there, so per 1 Steem. So this is increased value, or increase in value of Steem. So this could happen in the cryptocurrency world. It's like Bitcoin went, now it's like 3,000 or something like that. So let's say it increased from year one to year two 1,000-fold, like that. Yeah, so thus what we have is thus in year one, all right, in year one, if we were to see the value of how many Steem we have, because remember we have 10 Steem dollars. Yeah, so we have 10 Steem dollars. In year one, this Steem dollars is equal to, well, you can just multiply it by the trading price, 1 USD over 1 Steem. So this means, actually it's the other way around. Let me just erase this. Yeah, just flip that around. So 1 Steem over 1 US dollars, so that, yeah, these dollars cancel. Yeah, these dollars cancel, and all we're left with, well, that's just 10, this is 1 over 1, that's just 10 Steem, like that. So we have 10 Steem over there, but in year two, but in year two, notice the difference. Now, because you have the increase in Steem value, 10 Steem dollars, 10 SMD, times it by, now we have 1 Steem, and it's increased 1,000-fold, so you have 1,000 like that USD. This equals 2, so now this will cancel. We're left with 1 over 100, which is 0.0. You smooth this decimal place 1, 2 times 0, 1 actually. So go 1, 2 because it's 1 over 100. So this is equal to 0.01 Steem, like that. So in this case, it would have been better if you knew that the value is going to increase, you buy or you convert the Steem dollars into Steem or Steem power, and then year two you can cash out, because 10 Steem here would have been worth $10,000. So right here, 10 Steem in year 1 equals, right here, equals to, well, 10 times 1,000. Yeah, so 10 times 1,000, this is just $10,000 of US dollars, actually. So 10,000 US dollar value. Unreal. Yeah, so if you were to convert the Steem dollars into Steem and then get it into here, or Steem power, I'll write Steem or Steem power, because again, Steem power increases faster rate than Steem, 9-to-1 ratio. So you could have actually had times that by 9, etc. If they increase at the same time, this could be close to 100,000, which is quite amazing. Yeah, so thus in this scenario, it is better to have converted Steem dollars to Steem in year 1, alright, or SP, because that's usually better to do that in year 1, and then convert it back to Steem dollars in year 2 as the value of Steem increases. And then you could deal with that, and then you have that contract locked. Yeah, you have that contract locked, saying I have this whatever $10,000 worth of Steem, and then they have to give you that much in whatever Steem is at that value. So summary: Steem is the cryptocurrency token powering the Steemit ecosystem. All others, derive their value from. Yeah, let's add that right there. So Steem and Steem dollars derive their value from Steem. Steem power is, or SP, is Steem locked into a long-term contract that gives a user curation influence and faster rate of increase of Steem, but can only be cashed out over a 2-year payment process. So it's a slower getting the return back. Steem dollars, SMD, are essentially US dollars, but denominated in an equivalent amount of Steem. Right amount right there. Just typed an amount. So amount of Steem, i.e. SMD or Steem dollars, are Steem pegged to the US dollar. That's what that pegged is. You might have seen this referenced a lot of times. That just means the number, whatever number of Steem can fluctuate up or down, but the US dollar, whatever that value is, that's what you'll get of Steem. So it's pegging it to it. So thus speculators will look to buy or sell Steem during price fluctuations, because it's easier to sell than Steem power, because Steem power is locked to the contract, and you have to gradually move it to Steem. So long-term investors will look to buy Steem powers as well as curate and publish content on Steemit, thus increasing in Steem in the long run, as well as making Steemit the blog posting social media website of the future, because the people investing in it are actually running pretty much the website and creating content for it. Steem dollars can be viewed as it's actually interesting, as depositing your US dollar cash as Steem instead of placing it in a typical bank, which may actually be better than in a bank, and I might go over this in a later video based on the interest rates, etc. Hashtag stay tuned for more. So you could just store your money there. So thus, in my opinion, this is in my opinion a truly revolutionary concept that solves many of the problems of content monetization and content censorship that are plaguing the internet today. So when you put or create a blog post, etc., that also creates money, all because you have this Steem ecosystem surrounding it. I might go over later how that is done exactly. And also, so to draw a better illustration of this, or just a final illustration, let's say you have, so the overall thing could be looked at as, let's say you have this entire thing is Steem. So this is all Steem. And now you have, then you're going to have a large portion that is Steem power that's locked into long-term contracts. So this is all inside. So Steem can increase and basically increase in supply around like this. So through inflation and new people creating content, new users, etc., and some other internal systems. Now this inside is the SP. And it should be a 9-to-1 ratio, so 9 SP like this to 1 Steem. I believe that's how it is. And again, Steem is pretty much Steem locked into a contract, and then you also have the Steem dollars right there. So I'll write SMD right there. For example, you could have, let's say, $30,000 of USD, locked into it, and this is equivalent of how much steam you have in there. And let's say you have steam power, you have 100,000 SP, etc. So yeah, pretty interesting stuff. So anyways, that's all for today. If you learned from this, and I'll be updating this as I learn more about Steem, Steemit, Steem dollars, Steem power, etc. Just because there's no real resource to explain it properly. The white paper doesn't do as good of a job as I would like. But anyway, stay tuned for more. Hopefully you enjoyed from this. And like always, yeah, get on Steem. Follow me at steemit.com @MES and make some money. Post some blog posts instead of comments. And also, I'll put the exact link to these notes in the description below. Also, I'll be uploading it to steemit.com, these exact notes, shortly after I upload this video. Anyways, thanks for watching, and stay tuned for another Math Easy solution.